Hello, everyone. Happy Downgrade Monday. How is everyone doing? Good morning, John. All the comments are jumbled up, so I'm not going to go through them all, but thank you for putting them in there. Sterling, he's covering Bostic's comments, Williams' comments. Jefferson was also in there this morning. We got lots of Fed speak this morning. Let me find everybody else's hellos. Good mornings. Good morning, Sterling. There you go. I'm scanning through here. Good morning, Patrick. Good morning, Bull Strike Cheetah. Good morning, Jacob. Consumers are still in good shape. Yeah, they're leveraging debt. That's not going to end well. Oh, what else is going on? Yes, Japan's 40-year bond yield hits the highest level in over 20 years, and our 30-year is climbing. Good morning, Jake. Again, I wish I could get to some of these comments in here. I have it all so jumbled up. It's a mess in here. But I was looking for something. You know, they're saying also whereas Hassett was also speaking. Oh boy, see, I wish it would come in order because it's just so frustrating when I don't know why Ecamm takes the comments and puts it out of order. I'll have to see if there's another thing. See, Senior Advisor Hassett, the economy will continue to take off. Then why does Trump keep beating up on Powell, saying he's too late? He should be cutting. If the economy is going to take off, the last thing you want to do is cut short-term rates. You can't have it both ways. Either the economy is going to take off, or rates are too high. But if the economy is taking off, rates aren't too high. Again, don't know. Good morning, MJ. Bond markets are trading like we have rising inflation, no recession, and no trade deals. If the Trump administration does not intervene here, well, that was from what I saw that earlier for Ko. I forget how you say it, Kobishi. Good morning, Harold. Good morning, MJ. So I don't know if we're going to see 8% rates, but the rates are definitely taking off here, taking off in Japan, taking off in here. So we're going to keep seeing this. It's going to start putting pressure on the markets. Good morning, Anissa. All right. What else we have? It's very light week in terms of releases. We have the Consumer Leading Index coming out at 10 a.m. Eastern, and we got more Fed speak in the afternoon. Logan and Cash and Carry. Tomorrow we got Redbook, Bart, and a ton of Fed speak tomorrow. It's like a day full of Fed speak. You got Redbook and Fed speak. Wednesday you got the mortgage stuff as always in EIA numbers, and you got to get a Fed speaker in there. Gosh, jeez. When did it get so out of hand with all this Fed speak? Thursday with jobless claims, Chicago Fed National Activity Index, Kansas City Composite Manufacturing, and of course more Fed speak. And Friday we have home sales and Fed speak and rig counts. So you see there's not a lot. Thursday's the only day that's really got anything minorly important. And then next Monday, a week from today, the markets are closed for Memorial Day in the U.S. So, don't know what the dog's barking for. We have the mega cast. Things are pulling back, especially tech, not necessarily even due to downgrade. I mean, Moody's was late. They should have downgraded years ago. Because we had the initial downgrades, how many years ago? Like 14 years ago. But I think tech's more pulling back due to rising interest rates because tech's very sensitive to interest rates. You have a little bounce back in United Healthcare. Telecoms are holding up. If we refresh this, we have everything's down. Healthcare's down the least. Technology and consumer cyclical are down the most. Remember, we were at cycle tops last week. Watching for the pullback now into the daily rotation zone. At this point, we still have two cuts priced in, with the first one still starting in September. Fear and greed is still the upper end of greed. Schiller PE 3660, close to the recent highs. In terms of earnings, not much this morning. After the close, this is a light earnings day. Tomorrow, Home Depot, important. Home Depot, especially with their guidance, After the close tomorrow, we got Palo Alto, we got Toll Brothers. Wednesday, we got Target, TJ Maxx. I don't know why it's not on here, but Lowe's is also on Wednesday. Lowe's is on Wednesday. So then we got Snowflake, Zoom in the afternoon. Thursday, you got Advanced Auto Parts, Ralph Lauren. After close, you got Autodesk. But going into the end of the week, there is not much going on. The most important things I'm watching: Home Depot, Lowe's, Target, Palo Alto. Those are the most critical things I'm taking a look at. So, good morning, Connor. Yeah, thank you. The Fed speak, especially Bostic, was much more hawkish this morning. Yeah, Bostic did say he was eyeing one cut. So, we can look at the, yes, we can look at the U.S. 30-year right now. Actually, I should do it. I should do it. But I wish these traded more. But you can see here, if we look at the longer term, we look at the weekly, they're getting close. This is, I got to use the other one. I got to use the Canada 30-year. What is it? But that changes the interval. Oh, that aggravates me so much. What is the Canada one? Here we go. U.S. There it is. TVC. See, that's why I can say the Canada one. It's on the Toronto Exchange. There you go. There you go. Trading 5.02. And if you go to your monthly, you can see here, if it does, the highs were put in October 23 before we got the snapback rally. This is why we could also start getting much more pressure on the markets. Yields of 5.178. We're trading 5.02. So roughly, we're 9 basis points away of breaking out. But that is very key. This is a lot of pressure. If you look at the 10-year, actually, let me just add this. Let me just add this so we can watch it over the next couple days. We'll just add that to the list. I'll scroll it up later. But if you have your 10-year also getting up to this real critical level. It was a lot higher in October 23. That got to the 5.013. This is starting to climb though pretty substantially and breaking out. Remember, at least in the short term, the magnet price is 4.688. Okay, so at least in the short term, and then we'll see if it does break out on the 10-year. Now, to the markets. You're welcome, MJ. Are purchasing IWM puts or put verticals a good hedge for a long portfolio in this rising interest rate environment? They can be. We don't have a major topic. Keep this in mind. Yes, we have yields. The market keeps shrugging everything off. Before this, the downgrade is not that big a deal. But the market still, look, just take all the news out of it. From a purely technical perspective, where are we? Weekly cycles at a top after this big snapback rally. Daily cycles at a top and rolling over. Extremely overbought. Does this do a lot of technical damage, even if we pulled back to 57.35, let's just say? Even if we pulled back over the next few days, look at this chart. Does that do a ton of technical damage? Could we be putting in a more substantial top? Yes. But remember, tops don't generally go vertical down. You get more vertical bottoms. You don't get vertical drop tops. You get rounded tops. You get things that make potential double tops. You rarely get vertical drops, even when you have a multi-week pullback like here, back in July 24. Look, boom, boom, boom. Then it grinds back up. This was a secondary reaction. Did it set up a double top? Yeah. Was it ever triggered? No. Then we got grinding. Then we got a double top pattern. Actually, that was a triple top pattern right there. But you got a topping, rounded topping, and then it rolled over. Okay? So, going to be paying attention to that, especially as we get to cycle bottoms again. Would I be screaming like the sky's falling, putting on massive hedges? These would be only pullbacks. And this is, look, in the scheme of things, let's just take this. I mean, this is where I will keep watching for stuff. You can always hedge minorly because, again, your VIX, a little pop today, but volatility, we were watching for stuff last week. Watching, again, this is not a big pop in volatility just yet. And if you put this in context, we're roughly trading now last Thursday and Wednesday and where Tuesday closed. We're down 1.2% in the S&P, but this is not big. We can easily pull back into the daily rotation zone. Easily. Okay, if we start breaking down, especially in the S&P below, just a little below about 58.75, then I'm watching for this pullback closer to 58.50, 58.55 to about 58.30 for an initial bounce area, or at least some buying pressure. If we break below that, then the bigger thing is closer back down to 57.25, 57.30. That still holds the daily rotation zone. So would I be rushing out and saying, oh, the sky is falling? Personally, no. Would I be looking if especially, and you brought up the IWM, which, that's going to be your small caps. This again, never closed above the 62.5. So downside hedging, the Russell is the least of the strongs. The least. It's where I will start looking first for the shorts. The last ones I'm looking for is actually the last one I'm looking for is the S&P. I look a little more in the NASDAQ, but not aggressively. Let's take a look at the NASDAQ. Again, look at the prior breakout level. The prior breakout level is technically all the way back at 20,100. Could we drop all the way there? Would it do a little more technical damage? Yeah, but that does not wipe out a lot of this rally. So put things in perspective. Again, the bottom of the rotation zone is technically about 20,350. I'm watching on a bigger pullback of a 20,500. Could we get a multi-day pullback with cycles at a top? Yeah. And then we're going to watch for the secondary reaction. That's going to be key. No, I know you're not watching for. I'm also commenting to people who might be watching this in the background and everything else because I've already got people thinking the sky is going to fall. Now, we're due for a pullback, but that's different from. I've already seen our market's going to crash because of Moody's downgrade. No. Okay. Again, every pullback is it going to crash? It's ridiculous. We broke a little key level of support from last Thursday. So unless the NASDAQ can regain 21,260, not real interested in anything on the bullish side just yet. Again, my key level, I'm watching back around 20,975 to 2,100 for the first little area, which is right around where the 8 EMA comes into play. We start dropping below that over the next couple of days. I'm watching closer to the bottom of the rotation zone and this prior breakout level. The Dow does have, maybe it's off the table. Hold on, let me double check this. I think it's off the table now. Yeah, it's off the table. So we don't have a little mini double top. That went out. We do have the key area I'm watching in the Dow after hitting the next harmonic level, which we can now update these. Or it looks like unless something major happens today, we're going to get a pausing bar. No, we've already hit it on the 4-hour. So far, your very key area on the Dow is 42,100 to about 42,150 on a pullback. The Russell, that's the one I'm paying most important attention to, especially if we hit the 2075 area, to see if that holds. If that does not hold, I'm watching closer to the low on Monday of last Monday, which was 2054 roughly. And then we still have a gap left behind close to the bottom of the rotation zone. The VIX, 1950. There's still, I mean, in the whole context, that's just a little gap up with cycles at a bottom. So into the rotation zone. Even over the next couple of days, if it rallies to 22, that's where I'd be watching for the next rollover play. The DAX, we do have a potential double top here. That's the only thing I'm watching there, but so far not trigger. And that's on a daily basis. Would need a daily close below 23,411. The notes, you can just look at the futures. They do have a potential double bottom. That's the only thing that would get me to shift the short-term thing. And so far, a very key support level is roughly holding. The yields do have a minor potential double top. Again, may never trigger. But that's the only thing that would get me to shift it. It would need a daily close back below 4.388. Other than that, still watching for that 87.5 to reconnect. Dollar index, we're getting the pullbacks. Now we're getting closer to the daily cycle bottom. We could still see some more pullbacks. The only thing that invalidates the sloppy inverse head and shoulders, though, is a close back below 99.015. Would I be looking to hold it that far? No. I am still watching for the next rotation back up over the next couple of days, but nothing yet. Crude, we did have a 4-hour minor double bottom trigger on Friday. The only thing that invalidates that, it did not pull back to 75% harmonic still. We didn't hit the first target yet, so that was 60. If this drops below 60.86 intraday or closes below 61.06, then that is off the table. It's invalidated. Other than that, I'm still watching for this rotation like we're having rotation move back up. And that's only a short-term pop. Could be setting up a more substantial top in crude. I would not be aggressive to the upside here. Could be setting up more substantial top again, back up against the 50. Natty gas dropping. Nothing to talk about there. Gold. Again, we've triggered the double top. It did trigger on the weekly basis against the weekly rotation zone. So when I continue to pull back, I'm paying a close attention to that first target. That first target being roughly 30.60. Okay, it's reacting to that 50 right there, and the 62.5, which is not closed below either. So in the short term, I need still a close below 31.72 to invoke the 62.5 rule, separate from the double top. Other than that, I'm still watching for rollover plays in the short term, because we are still very, very extended. Look, we're still very extended from the monthly rotation zone. So either gold has to sit and pause for a little bit of time and let the rotation zone catch up, or gold can pull back. But I'm not aggressive to anything on the upside just unless this pattern gets invalidated. Yeah, that's not a big thing though. They trade very independently. They're just going different directions right now. Again, copper, the 10-year on the yen, also the yen 30-year, the yen 40-year. Here's your yield on the 40-year of the yen. Take a look at that. Take a look at that. That just keeps climbing now. It's overdone. We do have a potential double top, but this just keeps climbing, which is going to put a lot of pressure on Japan. The yen pulling back. Going to be watching for a bottoming pattern in the yen coming into the next couple days also. Looking for that. Euro, after hitting the second target, also in the sloppy inverse or the sloppy head and shoulders top, pulling back. We're at cycle tops again. So I'm still watching for rollover plays in this unless it closes back above 113.82. The spiders, again, gap down today. The key for the spiders is to reconnect with the rotation zone, coming in roughly about 581.60. That'll keep rising to 582. The key support I'm looking at today, if we continue to pull back, is around 585. The Qs, again, the major area is back at about 508.50. The minor area, we're trading just below. There's some minor support was around 515, which we're below now, 513. So any bounce, I'm watching 515. And then the next key I'm going to be watching on a continued pullback before we get closer to the daily rotation zone is right around 509.50. What else do we have? We have Bitcoin. Also, remember, completed the 87.5, tried to break out the upside, and now pulling back. So I'm going to be watching the bottom of the daily rotation zone right around 100,600. Other things, Tesla, we do have a potential double top against the daily rotation zone. That needs a close below 334.72. Just a minor, remember last week I was talking about watching for it to reconnect with the 50% harmonic, and we did that on Friday, setting up a potential double top pattern. What else? Movie magic moments. Checked if Pi USD has daily double bottom. Sounds like you want it to have a daily double bottom. A daily double bottom? We don't have a daily double bottom. If you're looking for this to turn into a double bottom, it has to get below 0.6906 to get into double bottom territory. And that would be only a potential double bottom, because then it would have to pull back or rise up and close back above 0.7840. So no, it does not have one yet. Other things we have still, I'll be watching again. Pullbacks in the rotation zones are going to be very key on these. Rotation zones are going to be very key. So the next level, like in NVIDIA, is we're back around 128s. We're still trading 132s, and watch for the gap fill. There's a gap fill that's still 129.93. This is not even major technical damage. So far, these are just regular pullbacks. Broadcom. Again, you're just at the daily rotation zone, but Broadcom's really overextended with cycles at the top. So I'm watching closer to a bigger pullback in Broadcom, closer to 210. But we still have potential bullish patterns to play out, like Meta. We haven't even hit the second target on the double yet. Gap down this morning. Pretty decent gap down, but again, the prior key breakout level is all the way back at 607. We're still trading 625. So we could still see, again, the markets bounce back over the next few days. That's what I'm going to be watching for after a pullback. Other than that, not much to talk about. Made a regression model for SPX that factors in macro daily, which projected 57.40 for month end. 57.40. Could we pull back to 57.40? I mean, we could easily pull back to 57.40 by month end. You know, next week next week is the month end week. So could we? Yeah. Look, you have even here, if you look at this, first cross rotation zone, 57.30 is roughly where the prior breakout zone. Could we easily end that next week? Sure. Again, still not major technical damage. All right, that's what we have to talk about. Thank you for everybody for chiming in. A lot of irrationality out there. Well, there's irrationality on a lot of different sides. But I have to just trade the patterns. So that's what I'm watching based off just cycles, based off how far we've run, based off of waning momentum. I'm just watching for that continued pullback into the daily rotation zone, and then a potential setup to get long again, and that will be the key thing on the next rotation back up. Because we didn't quite check off the 87.5. We got close, but I'm going to be watching that. By the way, the spiders, remember, the spiders also did not check off the 87.5, so we could easily still see another rotation back into all these things going back up after this pullback. With that, let's just see where the tick opened. Let's see where the tick opened. Where did the tick open? Where's pretty negative tick? That's a very negative tick opening. Wow. Lots of selling pressure into the open from the broad stocks. So, going to be watching with the tick bounce how much the S&P can bounce, and then be looking for the next rollover. I'll be looking to see for the next rollover, unless the S&P can really start climbing above about 59.30. With that, I shall talk to everyone later. Hope everyone has a wonderful trading day. Bye for now.